When I started looking at digital assets, there weren't as many marketplaces as I think by now I already know about 30 different marketplaces. I own one myself even. But the point is that each marketplace or have their own flavor or the kind of buyers, the kind of verification they do about on the data, the size of the deals. As example, with SaaS, your first try would probably be with acquire.com. Okay, that's the right move with that one. With content websites, you'd probably go to Flippa. But if you want a larger size deal, you might go to Empire Flippers. They do more vetting and you probably want more confidence there. But if you want the best deals, you need to go to Private Deal Flow. They would not be on the marketplace, but that requires more work. And it's worth mentioning, there is now a platform that aggregates all marketplaces called DealSlide. You don't say Google this anymore, you say GPT this now. So basically, you'd get all this data and all those listings in one place.
I'm John Wright, and you're listening to Affiliate BI, the business intelligence and affiliate marketing podcast brought to you by StatStrong.
Welcome to the Affiliate BI podcast. Today we're chatting with Shlomo Freund, who is the founder of Free Financial Self and CEO of Asset Bolt. Shlomo, welcome to the show.
Thank you, John, for inviting. Pleasure being here. Thank you so much.
All right, so we're in a group called Snowball, and we're chatting a lot of M&A stuff in the background, so I want to jump right into it. What's your current state of work in terms of investing M&A, and tell us a bit more of what you do?
I've been doing internet marketing for many years now, but at the last, let's say, 4-ish or so, I've been starting looking more seriously about digital assets because these are great cash flowing businesses. So we're talking 30, 40, sometimes 50% a year, even better sometimes. So I've seen thousands of deals and I've acquired some myself. At the last, let's say 2 years or so, are more focused on finding deals and helping companies and individuals finding digital assets. So more into the consulting side, but I've done through the whole finding those assets and then migrating them and then operating them. And now I'm more focused, as I mentioned, on the deal side, helping others.
Would you say that deal flow and just finding the right asset is like most of the work or half the work? I think that's important, but what is your take on that?
That's a wonderful question. Every person has their sweet spot, the things that they're good at, the things that they're not as good as. And I found out that I'm better in finding the good deals and not so much about the operation. So whenever I had an asset, or almost every case, eventually I brought in a partner. And just like every business, some of them were good, some of them were not good. But the point is, there's somebody else who would help or do the operation or be something. And I was good at finding that deal and initiating this. The thing is finding, for me, a good deal is finding either undervalued or with a lot of easy wins. So it's hard to say what's the percentage of that. I'd say probably, 50% of it is finding a good deal, at least with that. But there are, of course, a lots of other moving parts when you get to do the migration and do the operation. But first, you need to find a good deal, of course.
Would you say that this is like a layer of business that is oblivious to most business owners that, like, I'm on the affiliate marketing side, so I've been building websites for a while and we see the M&A space of people buying and selling websites, but do you think that there's more opportunity for SaaS companies, SEO agencies to go, hey, let me explore and see what we can do to improve our business, whether the obvious is stacking revenue, but the other one's like maybe you can acquire a company that's just pure strategic value?
Definitely. So this whole world of buying digital assets is basically saving a lot of time. When you build that, and you probably know that, John, when you're building something from scratch, you're looking at probably 6 to 18 months until you see some tractions, unless you have a community and you have something else that pushes you even faster. But if you're just starting, you're saving a lot of time on basically acquiring something. And the nice thing is that from day one, these businesses are already cash flowing. So you're already starting to get the return on your investment. Now you want to leverage that, as I mentioned, with those the easy wins or undervalued assets.
I want to take it to the kind of, I wouldn't say the negative side, but let's say the unfortunate side of, let's say, mergers and acquisitions, where I've seen in affiliate marketing, a lot of companies getting acquired with no real strategy about how they're going to integrate that. And they end up just getting like bloated. So it's a big company with a lot of money. They're just basically buying things left and center where people are like, oh, they're just overpaying. What are some of the mistakes that things go wrong in M&A?
So you need to find in digital assets what's the audience there. There are tons of just random people going into that, let's say a blog, okay? So you need to dig in mostly on the buyer's intentions, and this could be through comments, this could be through their Google Search Console, finding what keywords they're ranking for, what people are saying on their the social network profiles and things like that. So I think that can mitigate a lot of the problems. I assume with the larger companies, as you mentioned, it's because they have so much money. Let's just try. It's okay. It's just a little bump in our reports. That's fine. Our financial reports. So they don't really care about that. But if you really want to be good at that, you need to much deeper into the data and figure out if that's the right audience for you. Let's say if you're acquiring newsletters, that will be easier because then the newsletter is most of the time very targeted. And even still, you can keep doing deep segmentation, either for website visitors, okay, if they're joining your newsletter, or directly to the newsletter if you're just acquiring the newsletter, and then keep getting more data and more insights, and then making your decision based on that data for acquiring.
Yeah. Yeah, I think we chatted before about where it's, if you're going to acquire an asset, it's like, how can you split this up into more data insights? And in one situation I'm in right now, I'm talking with the company and I'm asking them lots of questions and they don't have the answers of things that I think would be important, which means that if I were to go ahead with this, I'm going to actually have to do that work and then try to extract more value and go, where am I segmenting things and where am I going to crank more value out?
You know what? There's another thing that you see a big mistake, because whenever I see a deal, I see a listing, I have that on my YouTube channel. So many, in many cases, there is a lot of data missing. Even on the listing itself, they haven't updated it, no P&Ls, like basic things that you really need to make a decision. And sometimes it's up to the buyer to do the work and kind of extracting that data from the seller. Yeah, like, dude, you want to sell that, right? So that's the thing. Um, Sometimes it's not worth it. It depends on the size of the assets and what might be more work just getting all this together. So we really need to make sense for the buyer.
Would you say that communities and newsletters are like an asset that a lot of people overlook and going, what could you do to, let's say, accelerate an SEO agency or SaaS company? Do you think newsletters are overlooked or are a lot of people zeroed in on that?
So I've seen a shift in the market 3 or 4 years ago. Everyone were about content websites. Then Google HCU hit, but even a little bit before that. And then started the rise of newsletters and then communities. So it's definitely more hype than it used to be. People are looking at acquiring newsletters. There are a lot of deals in newsletters. You hear about them maybe once a week. So this is happening a lot. It's a wonderful way to get more subscribers, of course, but it really depends how active that list is, how warm it is, how much data you have, and how much sales it makes. It could be that it makes nothing and you just get a list of emails and maybe somebody sends them something once a month. That might be not enough. So you need to warm up the list again. I'd say by now they're a legitimate asset.
Yeah. Would you say that there's an opportunity for, let's say, a partnership where it's done on okay, is this newsletter going to be worth it? So obviously you could say, okay, let's do a partnership. Let's just assume it's paid. You're doing like a one-time post and go, what kind of value can I get out of this? Would you say this is something people should consider if that's an opportunity?
So you can test buying in assets by just doing sponsorship to a newsletter. Many newsletters offer that, and then see what happens. If you get a lot of value for that, maybe that's basically a good way for you to acquire that. With classic affiliate sites or content sites, it's harder because then how would you, it's harder to measure, and then maybe the seller would not agree to do that test. It's more complicated. It is possible. With newsletters, much, much easier.
So going back to what I mentioned before, so we're in the Snowball Club, and I mentioned like I was interested in acquiring a WordPress theme company. And without going into all the details, what kind of advice would you have for me? And I'm sure you're probably going to ask me a bunch of questions. Like, what would you advise for me as a potential acquiring of getting an asset like this? And I think one of the concerns I had was like, am I buying terms and conditions? I know this asset has a lot of missing data, which I know I can actually extract more value out of. But when you run into friends that go, hey, Shlomo, I need a bit of help, how do you start things off?
So I'd first look at the easy wins, and my easy wins are not your easy wins. You have a set of skills, a network, another business. So it's worth something for you, and which is different to another person. Yes, there are some, let's say, global easy wins. Let's say bumping up an ad network on a content website. That's not the case here, but that's an example. Or raising prices, as we mentioned before, or things like that. But you need to align those. The bottom line is aligning the easy wins that you see that are good for your business. I assume that you are acquiring it to merge it to another business. So that's a strategic buying. It's the best thing to do. I'd say even now we're living riskier times to just buy an asset as is. It's better just to have an asset and then do an M&A with another one and another one, and just build your ecosystem with those assets.
Would you say it's a little, I don't want to say it's even common, but I've got some friends that when they buy affiliate websites, they're telling me that they're able to achieve ROIs as fast as 6 months. Obviously, if we could do that all day long, I think we'd do that. But what would you say? What's your take on how do you find these opportunities to just say, I'm gonna get the ROI in 6 months?
So we spoke about finding those good deals, and really I've seen thousands of those, and there are gems in the haystack. Really, they are. They're just hard to find. Even still, and I'm talking from personal experience, the gems might not be gems. And I'm not saying, it's not like they're not gems, but you might did something wrong or evaluated it the wrong way, and it's not as you expected, basically. As example, I bought a website that was undervalued because 2 years before that, I bought another one with the same traffic, and the first one cost 10 times than the second one that I mentioned. I was like, wow, that's amazing. And I still hold both assets. They are both dropped because of ACU. However, I thought that I'd be able to do more with the gem that I found that cost 10x less than the first one. And that didn't happen. So it's also about taking a chance. But I really thought in that case, that will be a really good acquisition. I still think it's a good acquisition, but now based on the opportunities that I have, it's not the best thing to work on right now.
That
That's the
makes
thing.
sense.
Yeah.
So you have a free resource, which is, I think it's where to start with buying niche websites. So I wanted to ask what's inside the resource, and does this cover like the whole range of, let's say, could you apply these things to SaaS, for example?
So I'd say that the resource is mainly a listing of the main marketplaces for buying different digital assets. Now, when I started looking at digital assets, there weren't as many marketplaces as there is right now. And now, I think now I list 9 on that resource. And I think by now I already know about probably around 30 different marketplaces. I own one myself even. But the point is that each marketplace or have their own flavor, or the kind of buyers, the kind of verification they do about on the data, the size of the deals. every person can find what's their fit. As example, with SaaS, your first try would probably be with acquire.com. Okay, that's the right move with that one. With content websites, you'd probably go to Flippa. But if you want a larger size deal, you might go to Empire Flippers. They do more vetting and you probably want more confidence there. But if you want the best deals, you need to go to Private Deal Flow. They would not be on the marketplace, but that requires more work. So it's you need to move between those and then find the right one. And it's worth mentioning, there is now a platform that aggregates all marketplaces called DealSlide. You can, you don't say Google this anymore. You say GPT this now. So basically, you'd get all this data and all those listings in one place, and they keep adding and improving. It really saves a lot of time.
I never heard of that. Now I want to go to the dark side of these whole marketplaces, which is, I think I've experienced this, but I don't know. I've heard of a lot of people say that, yeah, go to these marketplaces because you'll find affiliate sites for sale and you get all of their data for free. And then you could use that against them to go target a market. Or you could just basically just mine data. If you're an affiliate marketer, you're like, let me learn about what's on the market. And you're just getting access to like Search Console, revenue data, analytics. What's your take on this? Is this like an inevitable part of the business that you just can't avoid?
So to be honest, I've never bumped into that's more of your side of the deal with affiliate sites. However, many marketplaces right now, you need to go through an NDA and T&Cs and stuff like that. Even Flippa, which was very open, many of the deals now you need to sign an NDA, the good ones. So I guess that really mitigates what you just mentioned. That's probably why they did this move.
Hopefully it does.
Yeah.
Yeah. Because I know in our situation, we raised money we're a bootstrap company, then we did a bit of fundraising and we were warned about this. We're like, you're going to run into investors that they're just going to listen to your ideas and then they're going to be, that's great, but we're also working on that. So
Did you
I
do
see
due
it on
diligence on the
all different
investors?
parts of business, like SaaS. I did, but then it's
Okay.
not until after the fact that you actually eventually hear stories or you realize what they're up to. Sometimes you do the due diligence and you're like, yeah, clean. And then 6 months later, you're like, oh, that's what you're up to. Great.
I see. Okay, from my experience, at least with the transaction, I closed all of them were clean and fine. So that's my personal experience.
I'm going to ask a really weird question, which is we're a startup. We're not quite profitable, but we're able to raise money to grow. When is the right time for a company like mine to start acquiring assets? Should we be looking to see if we can pick up small assets in like the 10 to 20K range, like little things that we think could actually help revenue and help us get more customers?
So with a 10 to 20K at the current market multipliers, you're probably looking at around an asset that makes $500 a month just for cash flowing. I assume that doesn't change so much the bottom line for a growing business. You're basically acquiring it for the traffic. And then the next question is, what's the traffic? If it's big enough, I've seen very profitable websites with very little traffic, so that might not be worth it. And I've seen wonderful websites with lots of traffic and not so much revenue. Because you're going with the traffic, because you need that, you probably need to look more into those. And because they don't make so much profit, you might still be able to find good ones for the 20K range, basically. Your first look is on the traffic, not on the revenue in that case. That's the thing.
Yeah. And just to give a bit of color, I've been looking. Go ahead.
No, go ahead. I'm listening.
Okay. I was just saying, just talking about like some of the situations where it's like WordPress plugins and newsletters. We found some where the owner is just basically like, look, I don't want to do this work anymore. I just want to straight up exit. The revenue is like 10, 15K a year, and I want a 2x multiple of the revenue. Like that to me sounds like it's almost obvious, with a couple exceptions that things are slowly grinding down and it requires a bit more TLC to keep that asset going.
I'd say if this guy, it depends on it's not about the revenue, it's about the profit. How much he's investing in building this and running this. If he has a full-time developer and basically that costs 5,000, that 10,000 is not 10,000. And then you put that expense on your company. So this is the first thing, basically, to ask and evaluate does the asset with that. And then the second thing is really understanding where her traffic is coming from and sales. Is that declining? Is that a straight line? Is that maybe going up? He's just tired of this. So what's the story behind? What's the story behind? Do you have that? Have you asked them? These are
Yeah.
really important questions.
Yeah, I have. So yeah, I've asked a lot of questions. So I'm not as experienced as you, but I've been on the acquiring side and the selling side of a couple of affiliate websites. So I ask questions like, what's the monthly revenue? Is this trending up or trending down? What's the breakdown of it? And some of these assets I'm talking to, they're actually almost totally neglected. They're just like running on autopilot, but they're slowly trending down. So the
Slowly
traffic is
trending down.
okay. But one thing that's interesting, and this is where maybe we can take another insight, is that these are plugins that are dependent on affiliate sites. Now, we know that a lot of courses like Authority Builder, they're basically shutting down their affiliate marketing courses. So my personal take is I think some of these plugins will still make money, but I think they're going to struggle where how many more people are going to buy these things if they think, I don't want to say SEO is dead, but we've seen helpful content update for the last 2 years, year and a half, just extend. So I think these assets are going to get weakened over time. And I think maybe I don't want to invest any more time or programming effort into this, no marketing. So that's why I'm looking at it going, can I still extract the right value and get the ROI without have this turning into not just a time sink, but a loss?
I see. To be fair, though, a year and a half ago, this asset would not cost 20K, it would cost 35K. So you also get the opportunity here. It's not the same market right.
Yeah.
I think that, but then again, as we mentioned before, it's about your business and how you're doing the right M&A to what you have already. So you're coming with your, let's call it unfair advantage over there or secret sauce, and maybe revive it. Maybe you kill it all together and just blend it into your asset that you already have. And then it doesn't matter maybe what traffic they have. You have all the subscribers and they keep paying, or you can keep mailing them and then maybe market something new to them. Basically, it's a whole different animal. So it's not necessarily, it's just like you mentioned, a little bit of TLC, and there's a good chance it'll be good.
I want to shift a little bit to the investing side. So I know that you're looking for like passive revenue that can come in. And in a perfect world, we'd all want something that's just a cash machine that requires no effort. What do you think about companies like Capital Pad with what Travis is building? And I'm assuming that you're working in the background of everyone wants these opportunities. Are these opportunities only existing for people like us that have the experience in working in these various types of businesses? Or is there another marketplace where people say, look, I have money. I want to trust someone like you to just deploy it. What do you see in this whole new space of growing digital assets with recurring revenue and the dream of just having passive income?
So the trend in the last, it's not even the last few years. I think it's already running for a few years. But there are funds that you can invest in that invest in digital assets. Even if I can mention Web Street, that Empire Flipper has, that's Web Street. Onfolio does the same thing. They're a public traded company. They're also doing that. Dumwells. So, and with those investments, it's hands off, and you can expect probably 15 to 20%. Let's see, be more conservative, probably 15% yearly return on your investment. But if you want to do more, then you got to buy the asset yourself. And then you do, as we mentioned, 30, 40, 50% cash flow, or like the example you gave, in 6 months, you'll get all your investment back.
Yeah.
That is possible, but that's not with the funds that I mentioned.
Yeah. So of course, we got to ask the AI question. Do you think there is a possibility that AI is going to disrupt what people have gotten used to? So people are like, oh, I'm just going to invest in this business. I'm going to invest in this SEO agency. I'm going to invest in this affiliate site. And we've seen so much change, like helpful content update. just wiping out affiliate sites. What do you think about this new future of big disruption?
It's not SEO anymore. It's now AIO or whatever initials you're going to call that. How you going to train the AI to find you and then link to your website. And this is why I mentioned before that if you're talking about buying a classic content affiliate website, I would not do it as is right now. I would merge it with something else of value because I see the risk with traffic declining. You need something, you need the moat over there, either built very fast, maybe a mailing list that you can build very fast and start selling to. So that's a moat, or the business that you're merging it into, or any of that. So you got to come prepared for such a deal. And yes, then you mitigate AI. We have no guarantees in this industry, but in many others as well for digital assets and changes. But I think that's the best you can do right now.
And do you think the VC space is going to be experiencing some of this disruption? Like we've seen like a lot of money and we're like, okay, look at this, venture capital space.
And
So there's just a lot of money there's like funds that seem like they come out of everywhere and it's all, they've got like the same recipe, but we know that there's only so much money to go around to invest in really good deals. And I'm just wondering if there's going to be like, if the VC space is catching up to itself where it's like, there's money, but at some point in time, you just can't like deploy it and expect to get consistently 15% returns.
yeah, I remember some of our conversations on Snowball comparing VCs to cash flowing businesses. Again, capital pad and what Travis is doing. And we see that the VC returns, most of the VCs probably don't add value so much to the deal. I'm a cash flow guy. I prefer cash flow over some promise for something at very early stage. It's safer. The key to sit on a large pile of money is basically just time, not to make a lot of money. Yes, to make a lot of money, but it's the compounding over time that gets you there. And that's the more safe, sure way to get that. It's not glamorous, of course. It's not a big exit. It's nice to have big exits, but they're so rare. And that's I think, the right path to most people.
And what do you see the future of affiliate marketing as it intersects with business intelligence?
The thing is that I've been talking to a lot of e-commerce businesses recently. We spend a lot of time in Thailand and I was at an e-commerce conference there. And I've been talking to e-commerce companies about acquiring content websites, basically, or newsletters. But with the content website side, I think that there is a good future for combining content websites with e-commerce. First of all, for the affiliate sites, in the world of SEO, everybody are talking about once you plug in e-commerce to your affiliate site, there is a chance that Google will bump it back up. So this is from that side. For the e-commerce company, they can basically acquire an asset and then instead of keep paying for ads, they would buy it one time or maybe make a partnership. And then they would hold those users, their target audience, potentially forever instead of keep being on the hamster wheel and keep paying for ads. They can still pay for ads, but they can do it in addition to the audience they already have. So that's, I think, is a better way to look at things. And the e-commerce companies don't see that because they're on the hamster wheel of keep paying for ads and inventory. And at the, what was it? The Chiang Mai SEO conference, I was at that one too. And somebody on stage spoke about building for selling from the perspective of SEO, but selling to SaaS companies. Okay. He said, you're all SEO guys. You can build all those stuff and then just approach a SaaS and sell that as a strategic acquisition. And then I came to him after his talk and told him, I've been to this e-commerce conference and e-commerce businesses don't acquire websites. And that's weird to me because it makes so much sense. And he said, you're right, very little do that, but that's the next big thing for them. So people who are more experienced and wiser than me said that, and I'm sure there is a potential there.
Awesome. Shlomo, thank you so much for doing this. I want to pass it back. How can people get a hold of you?
So you can get me on either on LinkedIn with my name, Shlomo Freund. I have my website, assetvault.com, or you can go also to, I have a personal website, shlomofreund.com, where you can, everything that I do is linked there. There's quite a lot there. So just whatever is interesting for you, either Free Financial Self or Asset Vault or my YouTube channel, you're seeing deals that I cover and see how you can evaluate those yourself. So any of that. And of course, get in touch. I'm happy to answer any questions.
Yeah, the YouTube webinars are very insightful. Thanks so much for doing this. I'm going to include that in the show notes. I appreciate this.
Awesome. Thank you very much, John, for inviting. We'll be in touch.
Thank you for tuning in to the Affiliate BI podcast. I'd like to take this time to ask for a small favor to leave a rating and review wherever you listen to your podcast. That helps us expand our reach to rank higher in podcast directories and reach more listeners.